As a doctor, you need disability insurance. But what kind? How much? What is this even insuring? In this video, you'll find out the answers to all those questions, why you need it, how much you need, and how to avoid getting ripped off. Welcome to Money Med School, where doctors come to learn about money. Well, I chose DI as a topic because I find that it's one of the first topics that gets us talking and thinking about what to do with our money. I remember hearing somewhere along the line as a PGY2, disability insurance, that's important, you need to get it. And thinking, note to self, important, need to get it. What is it exactly? What you will learn in this lesson. Number 1, what the fuck is disability insurance? Do I need disability insurance? If so, how much do I need? What kind do I need? How much does this shit cost? How do I get it? And when do I cry? At the end, I'm going to walk you through my actual insurance policy so that you can see what I'm talking about and how easy it is to understand. Before we begin, we should do some mindset work. When it comes to insurance, you have to remove all thoughts of justice, humanity, and fairness and replace them with math, risk, and probability. For those of us who care about humans and stuff like that, it can be a rough read. So buckle up, Buttercup. Insurance is a product sold by a business, and the math can sometimes seem cold-hearted. Before I explain disability insurance, I want to give you the big picture view so that you can understand the context in which insurance fits into the overall topic of personal finance, or as I call it, financial wealth. Wealth plus health equals wealth, hence physicianwealth.com. To that end, I have made a butterfly-themed metaphorical infographic. I think of financial wealth as having 3 components. Wealth creation, denoted by the little eggs, which is income. Wealth cultivation, the caterpillar, which is a balance between growth and debt, growth being savings and investments, and debt being consumer and educational debt. Wealth protection, the chrysalis, which consists of loss prevention via tax strategy, insurance, thoughtful spending, and asset protection. If you care for these 3 areas, you will be in good financial health. But in order to fully become the financial health butterfly, you also have to have a positive money mindset and education. All of this is covered in Money Medical School. As you can see, insurance is in the category of wealth protection. I think of this as minimizing loss or holding on to what you have. This is arguably the most important of the 3 components because it's not so much what you have, it's what you manage to keep. Insurance is a small but important piece of the whole puzzle. So insurance. Okay, we buy insurance just in case something happens to our stuff or to us. We insure our cars, our homes, and our lives. Car insurance covers the cost of repairs or replacement if a car is damaged or totaled. Home insurance covers the cost of damages to a home from flood, fire, etc. And life insurance pays our dependents what we would have earned had we not died. Now, you may be thinking, yeah, I understand car insurance and homeowners insurance, obviously, but I don't get what disability insurance covers. Disability insurance is essentially insurance for your income, i.e., your career and your educational debt. A disability insurance policy ensures that if you can no longer work as a physician due to disability, you will receive a monthly income. If you chop off your hand and can't be a surgeon anymore, disability insurance will send you a monthly check. This does not cover you if you can't work for other reasons, like, oh, I don't know, a pandemic. It only covers you if the reason you can't work is because you have an injury or medical condition that makes work impossible. So it wouldn't cover you for a business interruption, caring for a sick family member, etc. In summary, you can't work, the policy pays your income because you can't earn income due to a disability. What is a disability? Disability is whatever your policy says it is. This is where it's really important to pay attention to the definitions, although it's not like you can negotiate the definition with the insurance company. It's more so that you understand what is covered and what is not. In general, a disability is any injury or medical condition that causes you to be unable to work. A disability can be temporary or permanent. Do I need disability insurance? Do you need income to pay your bills? If yes, then yes. If no, then no. In general, Doctors make a lot of money and often have a lot of debt, so we need to be able to work. If we lose the ability to work, we are shit out of luck because we have a lot of bills due to, jumbo mortgage-sized student loans. Now, if you're someone who's independently wealthy, then fuck it, DI isn't for you. If you can pay your bills, whether you work or not, then you don't need DI. DI is for those of us who would be up Schitt's Creek without a paddle if we lost our incomes. How much do I need? Well, how much disability insurance do you actually need to buy? You need to buy enough to replace enough of your income to live off of and save for retirement. You have to figure out how much money you need to live on, plus how much money you need to save for retirement, and determine a monthly income requirement. This is covered in Money Medical School. The amount you are eligible to purchase is determined by the insurance company. It's usually a 15 to 20% loss, so you are eligible to replace 80 to 85% of your income. The cool thing about disability insurance disbursements is that they are quote-unquote tax-free. If your policy says you get $10,000 a month, then you get $10,000 a month. So what makes up a disability insurance policy? Good question. I'm going to break this down because this is where people get overwhelmed and bored because it's fucking overwhelming and boring, but it's what allows you to understand your insurance product. So I've tried to summarize this in as painless a way as possible, although now may be the time to get those eye toothpicks and forks out. Okay, there are two main components of a policy, what you get and what you pay. In other words, benefits and premiums. Benefits are what you get if you file a claim. This is the money you receive if you can no longer work. Premiums are how much the policy and components of the policy cost. Premiums is just another word for cost. Benefits. There are general benefits and then the extras or riders. In general, there is your maximum monthly benefit, which is how much money you get paid per month if you claim. Some policies also have a death benefit, some have a COBRA benefit. The death benefit is a chunk of money your beneficiaries get if you die. This is also what life insurance does. The COBRA benefit gives you a monthly payment if you have to go on COBRA. And finally, riders. These are the extras that are available in addition to the general benefits. Benefits are a little different from policy to policy, but these are the main ones overall. Keep in mind, benefits have time constraints. They don't kick in until after an elimination period, which is usually 90 days. This means you don't get benefits until 90 days after your disability occurs. So you need to have an emergency fund of at least 3 months saved up to pay for your life until benefits kick in. And I show you how to do this in Money Medical School. You also have to have been insured for a minimum amount of time before you can claim. And finally, because it's meant to replace your income, the policy expires at retirement age. You can also get shorter-term policies, but most are through retirement. Premiums. Premiums are another word for costs. There is the cost of the monthly benefit plus the cost of the riders. Some riders are more costly than others. You may or may not need all of these riders. That is up to you and your individual situation. This is why it's important to have an insurance agent that you can trust. The more features or riders a policy has, the more it costs, and the more commission the agency may make selling it. Thus, there may be a tendency amongst unscrupulous individuals to sell you more than you need, so that they can make more money on the sale. Finally, all policies have exclusions and limitations. These differ slightly between insurance companies, but for example, my policy excludes any injury or sickness caused by self-inflicted injury other than a suicide attempt, injury sustained during commission of a felony or illegal occupation, and military service. I am not allowed to receive my benefit if I'm in jail for over 30 days. It's important to note pre-existing condition limitations. For example, my policy won't pay for any pre-existing medical condition within 2 years before the start of the policy. And of course, all pregnancy and childbirth issues are not covered unless you're out for more than 90 days. So if I get hurt while running my meth lab or I can't work because I'm in jail from my meth lab, I'm not getting shit. Let's talk more about riders because these are what you have to make decisions about when you choose a policy. You want to understand what they're for and how much they cost so that you can have an informed discussion with your insurance agent about what's right for you and so that you will avoid being sold riders that you don't really need. There's 2 kinds of riders, benefit riders and limitation riders. Benefit riders are provisions that describe a benefit you will receive under certain circumstances. Limitation riders describe limits on those benefits, and these can result in a policy discount. Some benefit riders cost money, and others are free. So here are some of the more common benefit riders. Regular occupation rider, also known as own occupation. This means that if you can no longer work in your specialty, but you can otherwise work, you will still receive a benefit. This is considered a must-have for a physician disability policy. This one costs money, as denoted by the money flying away. Future benefit increase rider. This lets you buy more insurance in the future, no questions asked. So no medical exam or questionnaire. They call it without proof of insurability. It's good to get if you are locking in the policy at a young age and plan to increase it in the future. For example, transitioning from resident to attending salary, or you get a higher paying job. This is usually free. Cost of living adjustment, also referred to as COLA. This one makes sure the benefit amount increases to offset inflation. I'm going to talk about this more in a moment. Residual disability and recovery rider. This one lets you receive a portion of your benefits if you are partially disabled and lose part of your income, either permanently or while you're recovering from a disability. Details vary per insurer. This one also costs you, but it is a good one to get. Catastrophic disability rider. If you lose the ability to do 2 or more ADLs, are cognitively impaired, or as my insurance agent so eloquently put it, this one's for if you're stroked out in a nursing home. Then you get an extra amount monthly. My agent said, in 26 years, no one has claimed on this, and also this is covered by health insurance. Benefit update. This says that you can increase your benefits every so often without a medical exam. Time frames and amount increase vary per policy. My policy states that I can increase the MMB every 3 years up to 4% at a time. Take note because some policies will do this automatically while others require you to fill out paperwork requesting the increase. And with every increase, there is an increase in premium, so you want to know if that's happening or not. Some companies offer a student loan rider, which does cost extra and will pay some student loans during disability. Okay, the limitation rider. Mental nervous substance abuse disorder rider. Seriously, nervous disorders? How did they come up with these titles? Did Sigmund Freud write this between appointments for his hysteria patients? The rider limits your claims for mental health to basically never, and they take 10% off the premium. Mental health coverage is a joke. Yes, they discriminate against mental illness. Why? Because this job is enough to drive you crazy. Just kidding. It's because mental health issues are so common that the likelihood of claims is too high of a probability. In the 90s, physicians were dropping out of medicine left and right and claiming mental health disabilities, especially anxiety and depression. I wonder why. All right, so as you can see, there are several optional policy provisions, but the 2 biggest must-haves are gender neutral and own occupation. Gender neutral, or unisex, means that the policy premium will be the same for all gender identities. Did you know that women are discriminated against when it comes to disability insurance? The insurance companies say this is because women file more claims. The available data is a little sketch, but states that women claim anywhere from 12 to 22% more often than men. But women's rates are 40 to 55% more than men's. How are these numbers acceptable? Well, it's still socially acceptable to charge women more for things and pay them less. Women, listen up. The number of insurance companies that offer gender-neutral policies has dwindled from 6 to 4 to 1. Only Principal offers this option. Only one insurance company offers a gender-neutral policy. One. And it's not available for residents. Own occupation means that the policy will go into effect if you can no longer practice medicine in your own specialty. For example, I'm a plastic surgeon. My policy goes into effect if I can't practice plastic surgery, even if I can practice family medicine or any other career at all, i.e., I can still work, but I can't work as a plastic surgeon, the policy goes into effect. All right, when should I sign up for this shit? As soon as you can afford to. The younger and healthier you are when you buy it, the cheaper it is. You lock in that price. But the less able you are to pay for it. In other words, the same qualities that afford you a lower price also make you less able to pay. Lol. There's one caveat. If you've got those pesky double X chromosomes, don't bother in residency because not even principal will provide gender-neutral policies to women in residency. WTF. How much does this shit cost? A lot. Next question. Disability insurance is fucking expensive. Not much else to say here. It costs a lot because claims are more likely. It can cost up to 1 to 4% of your annual income, or 2 to 6% of the monthly benefit. So, for example, $200 to $600 a month for a $10,000 a month benefit. A non-unisex policy could cost 10% or more of the monthly benefit. How about that? What else drives up the cost? Lots of shit. There's you. For example, such things as you've got 2 X chromosomes. You're old. You smoke. Why? You're unhealthy. You live dangerously. You live in a shitty state. You have a high-risk specialty, i.e. procedurally based. You make a lot of money. The price of your disability insurance policy is commensurate with how much insurance you purchase, which is a reflection of your income. So as your income increases, your policy premium will increase. The more you make, the more you have to replace, so the more insurance you have to buy. In other words, if you are a skydiving smoker granny surgeon making bank, your premium is going to be high. Then there's the policy components. The monthly benefit, the higher it is, the more the policy costs. The number of expensive riders that you purchased. The length of the policy. The longer the length, the higher the cost. And then there's your agent. A good agent has access to discounts and is honest about their commission. More about this in a moment. Now for the good news. What lowers the cost? In addition to improving your health and lifestyle, how often you pay. Annually saves you money. Monthly does not. If you pay annually in one lump sum, you will pay the actual cost of the premium. If you pay in installments, they will add a fee. This can be several $100s per year, depending on the policy. You belong to a group with a discount, such as an employer, hospital, professional group like the AMA or the American College of Surgeons. And your agent has access to discounts. This is really your best bet. This is where you're going to get the biggest discount. And then there's that mental health rider giving you 10% off for not having a normal reaction to a highly stressful job. Remember, insurance is a business. Insurance is a product. Insurance companies determine their pricing, their premiums, and who their customers are by running customer data through actuary tables and algorithms. Actuaries are people who mathematically calculate risk. They determine your risk based on your age, medical history, and lifestyle and calculate the probability of you becoming disabled and thus you claiming on your policy. And if the risk is too high, forget it. It's just math, calculating risks and probabilities, just little math equations applied to the lives of human beings. You know who else profits based on the calculations of probabilities? Casinos. The business models are not dissimilar. Okay, now that you've lifted my spirits, psyched me up for this expenditure, and reaffirmed my confidence in humanity, how do I get some of this disability insurance for myself? You can't buy a policy directly from an insurance company. You got to get an insurance agent. Notice, I'm saying insurance agent. This is a service that the financial advisors push to offer you. They may have commission motives, or they may see it as a way to gain you as a client. Either way, you really want an insurance agent because these are dedicated professionals. This is all they do. They aren't using it as a calling card, foot in the door, or worse, commission. Whoever you go through will receive a commission, but it's important to go with someone that works with all the companies and therefore receives a similar commission regardless of the sale. Not to make you paranoid, but just be aware that some agents or advisors may be tempted to sell you more policy than you need, or to sell a certain company's policy in order to increase their commission. Now that you understand the components of these policies and what you need and don't need, this won't happen to you. Also, don't be afraid to ask them how their commission is structured. A good agent is independent. That means they don't work directly for an insurance company. For example, they are not a MetLife insurance agent. An agent who works for an insurance company will not be able to compare policies for you, and they are limited to selling their own company's product. A good agent can get you discounts. They have outstanding customer service. They are not biased or limited bias in their commissions. They specialize in disability insurance policies for MDs. They sell a lot of disability insurance policies to MDs. So they have experience and they know what is appropriate to offer you. And they have access to all the insurance companies. So they give you all the quotes for each company. They basically run it through their software and they give you the quotes. Or they should give you a comparison of quotes. And they want the best policy for you as a client. Not all insurance agents are fiduciaries, but many are. You should ask your agent if they are one. A fiduciary is a professional who is bound to act in the best interest of their client. And once again, a good policy is own occupation, gender neutral or unisex if you're a woman, non-cancelable, guaranteed renewable, and it has appropriate definition of disability and appropriate riders for your personal situation. So these are the steps to get disability insurance. First, watch this mini course. Step 1, already completed. Now the process is totally demystified and you are confident because you understand disability insurance. Number 2, find an insurance agent. Use the criteria above and interview 3 agents. Ask all of your questions and get their opinions, and use the attached PDF to record their answers. Get quotes from all of them and compare. I'm also happy to share my agent's info if you contact me. Next, you're going to select a policy. Now that you've watched the course and discussed options with the insurance agent, you understand what components of the policy you need, so you can easily select the one that's best for you. Next, you're going to complete an application. They will ask for demographic information, proof of income, and then there will be a telephone interview where they take your medical history and someone will come to you, check your blood pressure, take labs, and do like a minor physical. Then there's annual maintenance. So once your policy is active, set up an online account access with the insurance company, not the agent. Make a file labeled disability insurance and place the paper copy of the policy inside, along with the name and contact info of your insurance agent. Once a year, check your mail because the company will send you an annual statement with your monthly benefit and premium information. Open the envelope. Look at the paper inside. Make sure the numbers are correct. Check. Is it time for a benefit increase? Is it automatic? And finally, make sure to increase your benefits every time your income increases. Don't be like I used to be. Don't use my personal filing system, which consisted of, this is mail from the insurance company. Must be important. I will place it in the pile of important papers in the kitchen. Oh, this pile is unsightly, and so after a while it will be relegated to the hidden drawer pile of important papers that I will read someday, but I don't want to look at now. Then, after a Marie Kondo episode, it will be refiled into a label maker, labeled, color-coded hanging folder file, never to have been actually opened or read during the years of keeping it. I cover proper nerd-level label making and color-coded filing systems in Money Medical School. One other thing. If you're a man, there are 6 main insurance companies that currently offer disability policies. If you're a woman, there's one insurance company that offers a gender-neutral insurance policy. In summary, TLDR, disability insurance insures your income. It replaces part of your income if you become disabled and you can't work. You want own occupation so you can get your benefits if you are not completely disabled. You buy it as early as you can afford to in order to lock in that lowest rate, but you probably can't afford to buy it until you're an attending. Don't get sick or start dangerous hobbies until after you buy the policy. You will be discriminated against in some way. Buy what you need to replace enough of your current income to live and save for retirement. Only buy what you need and buy it with an experienced independent agent. Now, let's do a walkthrough. I'm going to show you my first disability insurance policy that I got when I was a fellow. When you get your policy, the insurance company will send you a summary, which are called data pages, as well as a full copy of the policy that explains each rider in detail. That's the fancy binder that I filed in my sophisticated filing system, TM. If you understand these data pages, they are sufficient. I'm going to show you each page and explain it so that you can understand it and see that it's pretty straightforward. All right, so here's the first page, pretty straightforward. You have the insurance company name, your name, the policy number. They let me know that they received the application and they processed it. Then they talk about the effective date of coverage and how much the monthly payment will be and when it will automatically be billed from my bank account. Then they give contact info if I have any questions, and at the bottom it says my financial representative's information. All right, page 2, these are the data pages. They provide a nice summary of a number of important features of the policy. First, it states what kind of policy this is, a disability income insurance policy. Next, it lists demographic policy information, so the policy number, the owner, the name of the insured's age at the beginning of the policy, the gender class, and the policy date. So I got this policy when I was 39, and it's a unisex policy. Next, it lists the disability benefit elimination period, which is 90 days. So this means that I can't collect disability benefits until 90 days after the date of disability. And then we have the maximum monthly benefit, which is the amount of money I will receive each month if I become disabled. In this policy, it is $5,000, which is the typical amount they give you if you apply during training. I think at that time it was more than I actually made. Next, we have the social insurance substitute benefit. Here it says not included. I'll explain why. The SIS benefit is a rider that can reduce the overall cost of the policy. It means that part of your monthly benefit would come from Social Security, disability, or some other governmental source depending on your location, and the rest would come from your individual DI policy. Well, it sounds great. Why isn't it on there? Well, it's not on there because in order to get the Social Security portion, you have to qualify for Social Security disability, which means completely disabled and unable to work at all. The whole point of taking out an individual disability policy is so that you can include the own occupation rider. So even if I can still work, as long as I can't work in my specialty, I get the benefit. With SSI, that is not the case, so it doesn't make sense to add this in our policy. Maximum benefit period for the disability benefit. This says that when the policy expires, so that's age 67 for this policy. Again, this is retirement age because the policy is meant to recover your income, which stops when you retire. The star denotes some caveats on this if you bought the policy on or after age 64. You can purchase policies that have shorter terms, like 10 years, and these are cheaper. Your occupation period is to age 67. This is when the policy expires. On the policy anniversary at age 67, which for me would be November 20th, the year I turned 67. This policy has a death benefit. My beneficiary would receive $15,000 if I died. Then it says, see exclusions and limitations sections of the policy. This is what I mentioned earlier about how the benefits won't apply under certain conditions, like you injured yourself when your meth lab exploded, so don't do that. Next, these are the riders in place on my policy. Now, my financial advisor set this policy up, and he included every bell and whistle. No expense was spared. This section is just listing the benefits, not the premium. So these numbers indicate what I would receive. So we have the limitation rider for mental health, so I got a discount for that. The capital sum benefit rider, I get $60,000 if I have a total loss of one eye, one foot, or one hand, in addition to my monthly benefit. So this is a one-time $60,000 bonus if I manage to take out one foot, one hand, or one eye in my injury, as long as it's not from my meth lab. Catastrophic disability benefit rider. This starts 90 days after the disability, and it ends at age 67 with the policy. But I get an extra monthly benefit of $7,000 if I am so disabled that I can't do at least 2 ADLs or cognitively impaired. Again, this is the one if you're stroked out in a nursing home. And again, this is also an area that should be covered by your health insurance. Cost of living adjustment rider. Okay, let's talk about the COLA rider in a little more detail. Inflation reflects how much money is devalued over time, and it is roughly considered to be about 3% per year. Inflation is why Grandpa could go to the movies for 5 cents and we have to pay $20. How does this apply to disability insurance? $10,000 in 2005 would be equivalent to $13,312 in 2019. If your monthly benefit was $10,000 in 2005 and stayed at $10,000, then by 2019, that monthly benefit would not have as much buying power. With COLA, the benefit amount would have increased over time. Without COLA, it would stay at $10,000 for the duration of the policy. Two things to keep in mind when you're deciding on COLA: your age and the average length of a disability claim. The average disability claim lasts less than 3 years, and 2/3 of claims are less than 5 years. So, is the extra cost of the COLA rider worth it? If you're more likely to have a short claim, then no. If you're disabled from the beginning of your career to the end, then yes. You're paying hundreds of dollars extra per year for this rider, and the likelihood that you'll make full use of it is less than average. This is an expensive rider because it really increases the value of the policy. Okay, I'm sorry, but I'm going to have to get into a little math here, but it's worth it because, again, we don't want to be ripped off, do we? Now, just a moment ago when I said that if the $10,000 policy had COLA, the monthly benefit would have increased over time. But notice I did not say that the benefit would have increased to $13,312, the 2019 value. The policy outlines how much this monthly benefit would increase. And there are two main ways to calculate this. First method is called a fixed percentage increase. For example, every year the benefit amount increases by 3%, kind of like a raise. The second method is called the third-party based increase because it calculates the annual increase based on a number provided by a third party, usually the Consumer Price Index, which is a number determined by the U.S. Department of Labor. So the fixed percentage increase guarantees a set percent annual increase, and the third-party based increase is a calculation-based increase. If the annual increase is based on the CPI-U, then this amount is tied to the performance of the economy. If the economy is doing well, then your monthly benefit will increase. If it's in the shitter, the amount will stay the same. The amount the benefit can increase or decrease is also capped. For example, no higher than a 6% increase. I've done the calculations for a $5,000 monthly benefit as an example. So here's 3 examples. The first is a fixed increase. The second is a fixed percentage increase. And the third is a third-party based increase. The difference between these two fixed increase columns is that one uses simple interest and one uses compound interest. So a word about interest. If the increase is a fixed percentage, it will be either a simple or a compound interest increase. Simple means that every year the same percent is added to the benefit. Compound means that every year the percent is calculated based on the previous year's benefit, and it's added to the benefit. So I'm going to explain this in an example. If the disability happened in 2015, the COLA rider kicks in 2016, 12 months after the injury. With the fixed percentage increase of 3%, $150 is added to the policy every year. So the first year, the monthly benefit increases to $51.50. The second year, the benefit increases $150 plus $51.50, which is $5,300, and so on. With the fixed percentage increase and compound interest, the annual increase is calculated every year based on the previous monthly benefit amount. The first year, the increase is 3% of $5,000, which is $150. So $150 is added to the benefit for a new amount of $51.50. The second year, the increase is 3% of $51.50, which is $154.50, for a total increase to $5304.50, and so on. With the third-party based calculation, we see that in year 1, 2016, the benefit did not increase at all. This is because the Consumer Price Index calculation worked out actually to a decrease in the benefit, so there was no change. In year 2, 2017, there was a $100 increase based on that calculation. In year 3, the benefit increased $102 to $52.02. At year 4, the fixed increase simple interest policy is still increasing by $150 annually. The compound interest policy is increasing this particular year $163.91, and the third party by $113, with a range of $0 to $113 annual increase so far. So as you can see, the fixed interest increase with compound interest is the best option. And you guessed it, the most expensive option. It's not offered by every company, and it costs a lot. Here's the COLA rider. My policy uses that third-party index method to calculate the annual monthly benefit increase. In this case, they do base it off the CPIU, that consumer price index. But they also reserve the right to use whatever index they decide is most appropriate at the time. My policy states here that the COLA maximum percent is 3%. That does not mean that the benefit increases by 3% annually. It's just setting a limit on the maximum increase. So that means that the annual increase cannot be more than 3%, regardless of what is actually calculated. So here's an example of how the math works out for the COLA for my policy, just so you can think about the cost versus benefit for you when you're deciding about COLA. So my policy's COLA benefit rider costs $275.50 per year. And this actually accounts for 12.5% of the overall cost of the policy. Over that 5-year period that I used for the previous calculations from 2015 to 2019, I would have paid a total of $1,377.50 for the COLA benefit. Now, if I had filed a claim for these 5 years, given the annual benefit calculations based on that consumer price index for those years between, well, in this case, 2016 through 2019, the total additional money I would have received is $617 over that $5,000 initial monthly benefit. Of course, the numbers apply differently for a longer term benefit, but most claims are less than 5 years. So for these short claims, personally, I don't think COLA is worth it. The problem is you never know if you're going to have a short claim or a long claim. So this is something you really have to decide for yourself and discuss with your insurance agent. Ultimately, I decided it was not worth it when I got my policy as an attending. So presumptive disability benefit rider. This states that if you lose the ability to speak, hear, or see, or both hands, both feet, or one hand and one foot, you'll get your monthly benefit, whether you can work or not. Unless, of course, you blew your foot off in the meth lab. In other words, they assume you're disabled if any of these things happen to you. Regular occupation rider. This is the own occupation rider, which states that you will receive your monthly benefit if you can't work in the specialty you were working in when you got the policy. Even if you can still run the meth lab, work in another job, you will get paid. Future benefit increase rider. This lets me purchase more insurance, i.e. increase the monthly benefit, once per year without proof of insurability. I can increase the benefit up to a certain amount, which is calculated by an index factor, with a 4% minimum increase and a 10% maximum increase. The supplemental health benefit rider, I get $30,000 lump sum in addition to other benefits if I am disabled by a cabbage, a stroke, or certain types of cancer. Really morbid stuff here. And finally, residual disability and recovery benefit rider. So this residual disability part means you're not totally disabled and you can still work some, but your partial disability results in at least a 20% decrease in your income. So the recovery part means you recovered from a disability and you're back at work, but you've lost at least 20% of your earnings. The policy will pay a portion of your benefits during this time, and I think this one is worth it. The benefit update rider, so every 3 years they may offer to increase my benefit based on the maximum allowable amount given the information received and their current underwriting guidelines. You have to submit proof that you're insurable, but not, quote, evidence of good health. I suppose this means you can't have taken up skydiving, but you can smoke a pack a day. Now let's talk about the premium information. This is a list of how much each component of the policy costs, and these are annual amounts. First, there's the cost of the monthly disability benefit, in this case $2,000.50 per year. Then it lists the riders. Some riders have no additional cost. You can see the catastrophic disability benefit is $311 per year, the COLA is $275.50, and the regular or own occupation is $324 a year. The residual disability and recovery benefit is $481 annually. The total cost of the premium is $3,392 per year. And then it lists the discounts. The multi-life discount is the discount that the insurance agent is able to procure. Here it is 25%. And this is due to deals that they have with the insurance company, the volume of policies they sell, and things like that. Then the 10% mental health limitation rider for a total discount of 35%, or $1,187.20. A total discount of 35% is pretty standard for a good agent to get, and agents' discounts are usually better than a discount you may get from belonging to a group or working for an employer. The annual premium after the discount is $22.04.80. And now this box at the bottom is very important. This shows you how much more you pay if you pay the premium in installments. This box here is called the premium payment frequency charge. If you pay annually, there's no charge. So you're going to pay $22.04.80. If you pay semi-annually, the charge is $54.95. If you pay quarterly, it's $109.92. And if you pay monthly, you're paying an additional $111.20 on that policy every year for the privilege of paying monthly. So you can save that money if you pay the premium in one annual payment. And finally, the whole policy overview. So this is what you get in the mail. This is a nice little booklet, the one that I so conveniently moved from pile to pile to pile to pile to folder to never open. This gives you the whole entire policy. So when you read through your policy, it is going to include the following things. The data sheet. It's going to describe each benefit in detail with all the legal terms. It goes over all of the definitions of all the terms, and it reviews the exclusions and limitations for each of these benefits. Claim information, how to file a claim, how a claim is paid to you, information on the premium and how it's paid and when, information on how the policy is renewed, and then the actual contract, which explains each rider in detail. It also has a copy of your original application for your insurance.